Get Rich Slow with John Wolf. Hey, today I want to talk about some of the big reasons that people think are just total roadblocks for getting mortgages and what the truth behind them is and how it actually looks like. So those main things, those pain points are bankruptcies, past foreclosures, judgments, and owing taxes. So let's take those one at a time. So there are two types of bankruptcies. In one case, you are forgiven in full after the proceedings for whatever debts you have. And in the other case, you have to set up a payment plan. Then after such and such time, the rest is forgiven. Okay. So for conventional mortgages, the kind you have to put 5 usually to 20% down, you have to wait 7 years on the type where all the debt's forgiven. And you have to wait 4 years from when the payment plan is completed for the other type. Now, FHA is a different story. So FHA, it's just 2 years from completion, whichever type that is. But there is a big exception, a couple of them, that make it 1 year. And that's important to know if you fall into that narrow category. So it's basically bankruptcy for medical reasons. So here's the two ways that can play out. So if the primary wage earner of a household is laid up for sickness, physical disability, whatever, spends time in the hospital, and that is the reason the bankruptcy occurred, then it's 1 year. And in a what's called direct medical bankruptcy, which I'm not a bankruptcy attorney, so I can't tell you what the real difference is, but when just about everything that's being forgiven is medical debts, and think about it, these are things people didn't agree to or do on purpose, so it's good that there's some forgiveness on that. But that is a 1 year wait for FHA. And FHA is a great loan. I mean, right now, 2.75 to 2.25% is like a normal interest rate for FHA. And even though FHA has some higher costs, there's a bunch of great things about it too. Also, just want to take a moment to talk about bankruptcy. Most people think bankruptcy is an atom bomb onto your credit, and it's not great, but you can actually complete a bankruptcy and have a decent credit score, good enough to buy a house right away, like, mid 600s, even a 700. That's not super difficult to do if you just watch what you're doing really carefully. All right, now let's talk about foreclosures. Now, foreclosures are a little bit more complicated than bankruptcy, but basically the same story. 7 years, 3 years, or 4 years, depending on the loan program. If that happened to you, let's talk about it specifically. Also, because it's not the date that the foreclosure happened for you, it's the date that it finished with whatever the insurer of the loan was. So sometimes those can be a year plus off. So it's important that you reach out to a professional to even know what that date is. All right. Now let's talk about judgments, child support, tax liens, all that good, terrible stuff. I was about to say all that good stuff. All right. So child support, as long as you are making your child support payments, we calculate that into the debt to income. It's totally fine. You can totally get a home when you're paying child support, even if you've missed some payments in the past. Tax debt, like whether you owe the state or the federal taxes, you cannot get a home loan before that's resolved. But resolved does not mean paid in full. Let me explain. So let's just say something happened, you filed taxes, you owe 40 grand, you don't have 40 grand, okay? So simple solution would just be to pay it, but you don't have 40 grand, but you want to buy a house. You should be able to buy a house. You can buy a house. So you enter into what's called I don't remember the real word, but it's a payment plan with the IRS or with the state IRS. They tend to actually be pretty darn generous, in my opinion. And when I'm doing the home loan for you, we just calculate that into the debt to income ratio. Most people, actually every person who's approached me with that problem, we've been able to do a home loan because the payment amount is actually based on your income, not how much you owe. So I have had clients who make enough of income to buy a house, a little bit more than that, but they have a huge IRS debt and they're really scared about the IRS repayment plan. And when they set up the math, it was an amount they could actually afford and get the house. So that was really cool. And that's something that a lot of people don't know. The last one I don't think I mentioned is just like a private party judgment. Something happened, judge ordered you to pay some other dude money or do that. In that case, if it's a large lump sum payment, that is a problem for you proceeding to buy a house. It's not an all stop or anything, but it makes life not easy. If you have a payment plan, same thing as the taxes, We just calculate the payment plan in, no muss, no fuss, very easy. And if you have a lump sum thing that you can't pay, it is usually possible to negotiate a payment plan. And as soon as that's done, and I might even be able to help you with that through the lending process, you'll be able to move forward and do that. Anyways, if you have any other questions about weird scenarios that may be a red light or completely stop you from getting a home loan, please reach out to me. John Wolf, Caliber Home Loans, and John Wolf, Get Rich Slow with John Wolf. Like, share, subscribe, give me all that goodness and love. Ask any questions you want me to answer. Have an awesome day. Bye.